Let's face it, index funds are the economy seat of investing. Cramped, crowded, and designed for the masses. But if you've got capital, why are you still flying coach? Most investors are told that index funds are the smart path. Safe, simple, set it and forget it. It's the advice you'll hear from every financial advisor with a suit and a script. Just put your money in the market, kid, and wait 40 years. But here's the twist. The ultra wealthy don't settle for average. They don't outsource their entire future to the stock market. The top 0.1% of Americans have nearly half of their wealth tied up into alternative investments. Investments that most people have never even heard about. One of these alternative investment vehicles are real estate funds. And in this video, I'm gonna break it all down for you. What real estate funds really offer, why the wealthy diversify into real estate funds, and how you can start thinking and investing like the ultra wealthy. I know what you're probably thinking, but Danny, I'm not a billionaire. I know. That's the best part. You don't need to be a billionaire to get access to these types of investments. You just need to know where to look and who to talk to. For those of you who are new to the channel, my name is Danny Gould. I'm the CEO of Gould Capital, a private equity firm that helps investors invest capital into hotel and commercial real estate projects without the headache of sourcing deals, vetting operators, or managing the assets. Now, over my career, I've overseen $250 million worth of real estate transactions here in Silicon Valley and managed over $300 million hotel portfolio. So when it comes to finding institutional caliber real estate investments, I know exactly what to look for. And the purpose of this channel is to share everything I've learned. So let's talk about index funds. These are the funds that track broad market indices like the S&P 500 or the NASDAQ. You're not picking individual stocks, you're buying the entire field. And for a lot of people, especially those just getting started, it sounds like a dream. Ultra low fees, built-in diversification, full liquidity, you can buy or sell anytime that the market's open, and practically zero effort. You just set it, forget it, and hope that it works out in 30 years. That's the pitch. But here's the problem. With index funds, you have zero control. You are at the mercy of the market. And the market doesn't care about your retirement timeline. You're locked in average returns by design because that's exactly what these funds are built to do. Track, not outperform. They're also tax inefficient with gains you can't time or control. And worst of all, there's no real cash flow. Just paper gains that swing with every headline. Because the truth is, index funds are how Wall Street keeps the masses just comfortable enough to not question the system. So if index funds are the smart strategy, why do the wealthiest investors in the world avoid them as their primary vehicle? Let's talk about what the ultra wealthy are doing instead. You ever sit around and wonder what a billionaire does all day? Well, they're not chasing headlines, and they're certainly not day trading meme stocks. They're placing large amounts of capital into private real estate funds, vehicles that are designed to acquire, operate, and scale income-producing assets. Things like hotels, multifamily, and commercial buildings. Why? Because these investments are built to do what index funds can't. Real estate funds usually generate predictable quarterly cash flow. They come with massive tax advantages in the form of depreciation and cost segregation. They use leverage and appreciation to create compounding returns over time, and they're not tied to Wall Street's mood swings every time Jerome Powell coughs. But here's the part nobody talks about. When the ultra wealthy invest in these funds, they're not just buying into an asset, they're buying into an investment strategy. They choose the operator or the sponsor of the deal. They don't hope that the market goes up. They build value by hand selecting the people who are going to be in charge of their investment. They're not speculating. They're allocating capital into real assets with real returns, while the average investor sits on the sidelines riding the stock market roller coaster. But the truth is, it's not all upside. There is a trade-off. For starters, these funds are illiquid. Your capital is going to be tied up into these investments for 3 to 10 years, typically. And they also come with higher minimums. Usually the minimum investment into these sorts of funds are $50,000 to $100,000. And you can't just blindly buy into these funds. You need to do your homework and you need to do your due diligence on the sponsor and the group that's putting the deal together. What the ultra wealthy understand though is it's not just about what you earn with these investments, but it's about what you keep. And real estate funds are built to do both. Now, if this sounds like a world that you want to understand better, I actually put together a free webinar that breaks down exactly how real estate syndications and funds work. No fluff, no filler, just a clear breakdown of how these deals are structured, what to look for, and how to get access. You can register to watch that webinar using the link in the description down below. So let me ask you, if you had $1 million to invest right now, would you really throw it all into an index fund and just wait for the next 40 years? Or would you start investing like the people who actually built real wealth. Now look, if you're just starting out, index funds are actually a great training ground. You've got limited capital, maybe a few $100 a month to invest. A Roth IRA filled with low-fee index funds is a solid and a sensible move. It teaches you consistency, it builds the habit. It's like strength training with an empty bar. You're just learning the mechanics, but once you've built some real muscle, once you've got real capital to deploy, you're no longer just saving. You're allocating and you're moving from accumulation into acceleration. And that's an entirely different game, because now the goal isn't to grow at 6% per year and hope that compounding saves you in 40 years. Now the goal is freedom, cash flow, tax protection, real control. And that's where real estate funds come in. They offer what index funds can't. Predictable quarterly distributions, massive tax advantages like depreciation, cost segregation, and 1031 exchanges, leverage to amplify returns, and a level of stability that only comes with hard assets. But here's the hard truth. These investments aren't for everyone. The minimum investment for these types of real estate funds can usually be $50,000 to $100,000 and sometimes have $1 to $2 million minimums. Not only that, they also require patience because these are non-liquid investments. So if you're not quite ready to throw down $100,000 on your next investment, perhaps this should be your next milestone. You can build towards it, prepare for it, because once you cross that line, you unlock access to a playbook that the wealthy actually use. Let me put it this way. The average American has 95% of their investments tied up in the stock market. But when you look at family offices, pension funds, endowments, the institutions that are managing generational wealth, they're not stuffing everything into public markets. It's usually only about 30% of their portfolio. The majority of their portfolio allocation is typically in alternative investments like private real estate funds. Why? Because it gives them diversification away from the Wall Street roller coaster while delivering superior cash flows, tax advantages, and true diversification. At the end of the day, you don't have to be a billionaire to follow that strategy, but you do have to stop thinking like everyone else. Now, here's the beautiful thing. You don't have to pick sides. You don't have to choose between Wall Street and private equity. Smart investors blend. Index funds are your foundation. They're simple, liquid, and a decent place to park your money while you figure out your next move. Index funds help you play defense, but if you're serious about building wealth, not just slowly accumulating it, you also need to play a little bit of offense, and that's where private real estate funds come into play, because that's where you find the real upside. So, what's the strategy that most ultra wealthy Americans use? They use index funds to stay in the game, and they use real estate funds to accelerate their growth. If you want income, growth, and tax efficiency, you don't get there by riding the market average. You get there by stepping into the private markets, where the rules are different. And here's the truth no one tells you. The game is rigged. But for those who know the rules, it's an unfair advantage. And once you learn how to play it, the right partners, the right assets, and the right structure, everything changes. So if index funds are the economy seat of investing, real estate funds, well, they're first class. Not because they're flashy, but because they give you what Coach never could. More control over your investments, cash flow, tax shelters, and a shot at asymmetric returns. The ultra wealthy don't ride the market. They build the runway. So if you're still parking all your capital in index funds, hoping for a smooth ride over 40 years, just know there's a better seat waiting for you. And if you're ready to make that upgrade to first class, Gould Capital was built exactly for investors like you. Now, access is invite only, but you can schedule a call with me in the description down below to see if it's the right fit. This is Danny Gould, everyone, with Gould Capital, and I will catch all of you in the next video.